Over the past few years, global economies have been dealing with persistent inflationary pressures. Triggered initially by the COVID-19 pandemic and later exacerbated by geopolitical tensions such as the Russia-Ukraine war, inflation rates in many countries have reached levels not seen in decades. Supply chain disruptions, increased energy prices, and labor shortages have all contributed to rising costs for consumers and businesses alike. In response, central banks around the world have taken aggressive measures to control inflation. The U.S. Federal Reserve, for example, raised interest rates multiple times between 2022 and 2024, reaching the highest levels since the early 2000s. Similarly, the European Central Bank and the Bank of England have also adopted tighter monetary policies, hoping to stabilize prices by cooling down demand. While these actions have helped slow inflation in some regions, they have also raised concerns about economic growth. Higher interest rates make borrowing more expensive for both consumers and businesses, potentially leading to reduced investment, lower consumption, and even recession. Emerging markets, in particular, have struggled with the strong U.S. dollar, which increases the cost of debt repayment and imports. Despite these challenges, inflation is showing signs of easing in 2025. However, economists warn that price stability is not yet fully restored. Energy markets remain volatile, and climate-related disruptions continue to impact food production. Additionally, wage growth in several sectors is putting upward pressure on prices, especially in services like healthcare and hospitality. Policymakers now face a delicate balancing act. They must maintain tight enough monetary policy to keep inflation under control, while also avoiding a hard landing for their economies. Many experts believe that future strategies will require better coordination between fiscal and monetary policy, as well as structural reforms to improve productivity and supply chain resilience. In the long term, addressing inflation will not only require sound economic policy but also investment in innovation, education, and sustainable development. As global markets become more interconnected, international cooperation will be essential in managing economic stability and preventing future crises.